The most popular pension funds and wealth managers are destroying your retirement and your plans to retire early, and they're destroying your pension. Let's break it down. Whilst you might not be able to read everything that's on the screen, I'm going to read it to you. And we're going to go through St. James's Place and their various funds. This is just one example of what's out there and how it's damaging you. So let's start off with the St. James's Place corporate bond. Okay. Now, why does it tend to lag the market, or at least its own benchmark? First of all, it's an active multi-manager. That means it's layering manager upon manager. Okay, which I know is not a pretty picture, but it means there's funds investing in other funds. And that adds a lot of cost to what is, in any event, a low return asset class. It's a corporate bond, low return asset class. I'm reading the information that I'm showing you on screen. In rising rate or even choppy rate environments, which are a lot of the time, basically you can be caught out by holding the corporate bonds and the funds there. The problem that they have beyond all of that, fees and interest rates, is they're also designed for income and capital stability, not compounding. So they're not actually there for long run real growth. Let me go through some of the others. Let's take the St. James's Place Global High Yield Bond. Sounds great. Global High Yield. Sounds great, doesn't it? Let me tell you why it's going to cause your pension problems. Higher default risk, because remember, higher yield. Junk bonds are high yield. And the drawdowns are a real problem on this, because you don't have the equity-like upside. Microsoft can drop, but it's also got a lot of the upside. With these, you get the downside, but not the upside. So when you actually look at their performance historically, you so often find that actually you're getting the downside volatility. You're just not getting any of the upside. And you'll be told, don't worry, just keep holding them. They'll eventually give you a return. So anyway, they're not the most efficient. Let's put it that way. Risk for the returns you're looking for. Let's turn to St. James's Place Emerging Markets Equities. And by the way, this isn't just a pop at St. James's Place. That's too easy to do. It's with all funds of this nature to show you the point that I'm making applies